Welcome to the Property Profits Podcast. Thank you for jumping on this evening. So let's get to it. Next week, I ordered a badass camera. I'm having these walls painted black, turning this thing into an aesthetic podcast room and workspace. I got some cool lighting I'm bringing in. Aesthetic isn't always my thing. It's really dropping knowledge, value, giving you gems, but I'm going to crank it up. It's got to get more visually appealing. So I'm freaking stoked about it. We got the board, we got all this visual stuff going on. It's going to be dope. But anyway, let's get into it. I want to go over cap rates. Cap rates are not generally talked about because they're more talked about like commercial, but you need to know what cap rates are. Even if you do residential, anything like that, multifamily, you need to know it. So, and even single family, you should know what a cap rate is. And Class A apartments trade on the 5 cap. Let's just put that. And like mobile home parks on an 8 to a 10 cap. What does that freaking mean? It was funny. Is me and Britt were talking last night, and she was like, "Man, how do you explain cap rates like at a fifth grade level?" So she literally went into Chat GPT and was like, "How do you explain cap rates at a fifth grade level?" Because anything at fifth grade level, anybody can understand, or they should, or for the most part. And it said for every dollar you spend, if it's a 5 cap, you get 5 cents back. And people generally use cap rates to see how much time it's going to take, how many years it's going to take to get their money back. But I thought that was really cool. Out of a dollar, every dollar you spend, you get 5 cents back. So, anyways, that was pretty cool. But like today, I was underwriting an apartment complex. It was like a $20 million deal. I think it was 10 million, but all these zeros, it doesn't matter. But the thing is, here's how we broke down the cap rates on this call. So they had, okay, you're going to need to know what NOI is, net operating income. What is left? And you're not going to use mortgage. Do not, like, debt doesn't account for this. So what do they make bottom line less the mortgage? So you're going to subtract bills and all that stuff, but not the mortgage. Do not include the mortgage. So there I was like 800 G's a year. You're going to do it by the year. And we already know that the cap rates in this particular Class A apartment complex we were looking at trade a 5 cap or a 5.5 cap. So that by net operating income for the year, that's what they made for the year. And I think it was last year's. And that's not a $20 million deal, by the way. But I'm going to go ahead and tell you to take out your calculator because for you that need to learn, I want you to do this exercise so you can start learning, absorbing, and if you want to know Spanish, you got to get around people that are speaking Spanish. You can't just read a book. You got to speak the language. So you need to hear me talk about it. You need to surround yourself with people that are talking about it. So let's say you're underwriting an apartment complex and they're trading at a 5.5 cap. And you find out they made 800 NOI, not including their mortgage. You're not going to subtract that from what they made. So $800,000 and on the calculator. That's what they made for the year. We're going to say stuff's trading at a 5.5 cap. Let's just call it 5 to be easy. Divided by 5%. Cool. $16 million place. If their NOI was that and things are trading on a 5 cap, $16 million place. Easy math. There's a lot more that goes into it. Like at a certain level, they're talking about debt ratios and things like that. But just for this simple conversation, as far as cap rates go, that's how it is. With mobile home parks, let's say that somebody's bringing in $100,000, or you know what? I'm going to give you a good example whenever I'm breaking down a mobile home park. Let's say you talk to somebody and they've got 100 spots. And they're like, yeah, we get $800 a spot. We're full, which is very rare. But let's say we're full. 800, we get $800 a spot. So 800 times 100, that's $80,000 a month. What is your expense ratio? What do you think it is? A lot of mobile home park owners are like, I don't know, like they either we'll have to get to our books or whatever, and you never hear back from them. I always assume 50%, at least 50% is what I assume. If they run it really well, I'm sure they can do it better. If stuff's on notes and tenants are paying their own stuff, it'd be badass. Let's just assume 50% if they don't know. So we just saw that they're making $1,000 a month. We're going to multiply that by 12, 960. That's what they're bringing in. We're going to assume with bills and all that stuff, not the mortgage, it's at 50%. So I'm going to multiply that by 50%. I'm going to get 480,000. That's going to be my estimated NOI until I get actual data. But this is their NOI. If I want this on a 10 cap, like I want to buy this on a 10 cap, all I'm going to do, and sorry if you're listening to this and you don't have the visual, I'm going to divide this by 10 at a 10 cap. That's a $4.8 million. And some people buy them on 8 caps, whatever. I always underwrite on 10 because I want to buy on a 10 cap. And I know other people do too. And on that note with parks, I like city sewer. I like city water. I hate when parks are on wells. If they're over a certain amount of units, I don't remember how much it is, but let's just say 30. You turn into a water company for real because you're providing that many people water. So you have to I forgot the government name for it, but you have to get registered with all that, and it's a pain in the ass. So I like city sewer, city water. I have parks with septic, but I wanted, anyways, let's get back on this. I wanted to go over cap rates and get your mind wrapped around it, not to make you drink from a fire hose, but just so you started thinking about this. So from now on, I want you to look, if you want to learn any commercial deal, if you want to learn multifamily, see what cap rate things are selling at different asset classes, different assets trade on different cap rates. Bottom line. So you got the math now. You pulled out your calculator and you did it. If you didn't, if you're driving, whenever you stop, do the quick math. Like all you got to do is we're going to go over this example one more time because I want you to understand this. There's a park, right? Each spot. And here's another thing with the park. You can't count trailer rent whenever you're doing this evaluation, just the lot rent. The trailer rent, whatever they're getting for the trailers, that's irrelevant whenever you're actually valuating the park. And people will disagree with me on this, but just go off the lot rent and then use the trailer value. Of course, depreciate it because unless they're brand new, but use a lot rent. But let's just assume for easy numbers let's just assume they're getting $400 for lot rent and they got 100 spots. $400 for lot rent. They got 100 spots. They're full. So they're making $40,000 a month in lot rent. Cool. We're going to multiply that by a year. That's 480,000. And by the way, if they don't have their numbers, I would run like a 5 to 10% vacancy factor in there. But I'm just acting like we know right now, just so you get the math. I don't want to throw too much at you. $400 a month times 100 spots times 12. That's $480,000 a year. But what do we got to do? We got to multiply it by 50% because they're going to have expenses until you get their actual paperwork. But let's be safe here. So we're saying NOIs around 240, what we think, until we get all the actuals, which, like I said, mobile home park owners, oh my gosh, it's tough to get those. But anyway, 240,000 is what we think NOI is. We're going to divide that by 10. We want to get a 10 cap. We want to buy this thing at $2.4 million. And if you're wholesaling it, guess what? You got to get less than that. But you can sell a city sewer, city water, mobile home park on a 10 cap $2.4 million. If you want to make money, it's got to be under that. So, anyways, I just wanted to wrap your mind around these cap rates and we'll dive in deeper just to give you an understanding, a higher understanding of it. But I wanted to get this in your mind and I encourage you to do a deep dive to learn some more. It could be confusing until you wrap your mind around it, until you hear it a lot. Thank you so much for jumping on. And until next time, we got a really cool guest coming on this week.